Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we had Ryan Craver on the line. He's a retail expert. He's the Senior Vice President of Emerging Brands and Digital at Lamour Group. How you doing today, Ryan?
Good morning. We're getting close to the holidays. I'm doing quite well. How about
Yeah?
yourselves?
Did you get all your shopping done?
Not all of it. Still got some more gift cards to purchase and send off digitally, but have definitely been into a lot of the stores over the past weekend to take a quick anecdotal look at traffic and see what trends are looking like. But
Do you think you
still have
bought
probably
most of your
about
stuff
20%
online?
left.
Do you think you bought most of your stuff online, or do you think you went into the brick and mortar stores and picked things out?
Me personally, I probably bought 90% of it online. It's just a lot simpler to ship direct to whoever you're buying those gifts for. I definitely think I'm probably an exception to the masses. I do know that everyone I've spoken to, at least anecdotally, has increased the amount of shopping that they've done online versus in stores this year. But I don't think 90% is the norm.
All right, let's go to the retail sales recap and some stocks that are just getting blown out of the water. Let's start with GameStop here. I mean, is this ever going to stop going down?
Wow. GameStop, I've historically, dating back for probably 7-8 months or so since we started talking, I've always been a bear on these guys long term. I think 2015, when we reflect in 2016, 2017, 2018, it's going to show that this was the inflection point for digital downloads. I've been into at least 5 GameStops within the last couple of weeks. The amount of store space that they're allocating to merchandise, T-shirts, and novelty items now is bigger than I've ever seen it. So not only are people buying their games online through the places like the PlayStation and the Xbox, but they're also showing that the sales are hurting in video games, and they're allocating more space to merchandise. I think again, there's no rosy picture for these guys longer term unless they start to figure out how they're going to offset all the loss in the high margin used video game sales and the relatively good margins of new game sales.
Ryan, let's just move over to Costco here. And here's a stock that has kind of been the honey badger of the retail sector. It's been going straight up here, it seems like forever. Company that can do no wrong here. Last week finally actually gives back some gains. Reports not that great of a quarter here. I was in a Costco over the weekend. The store was just packed. So, from what I'm seeing there, it still looks like those things are pretty busy here. This Costco, is this a pullback that we should be looking at as an opportunity here? What do you think of COST?
Yeah. So Costco I've always been a big fan of. I was pretty shocked that pre-earnings the media started labeling them as Amazon-proof. I don't think they're necessarily Amazon-proof. I think their impact from Amazon is smaller than the other retailers. With that said, the things that you gotta love about Costco is the fact that it has that massive membership base that is an annuity that continues to pay itself forward. The second thing that I love about them is that they're finally moving away from Amex. They'll be moving over to Visa in March of next year, and I think that's not just good news for them expense-wise, but it also helps with sales, and it probably will broaden to a few other memberships being sold. I think their stores are doing phenomenal, but they've got a lot of weakness through the dollar internationally. So if you look at on a common currency basis, they're struggling. With that said, if you look within Canada, you look within Taiwan, you look within all the other countries that they're working in internationally, they do have positive comps on their local currency. So if you're forced to play in the retail space, there's only 3 areas that are doing well right now, and one of them is warehouses. And the best performing warehouse is Costco. Sam's Club's getting killed by Costco, and BJ's is a lot smaller and not nearly as national as Costco. So you're going to play in this space. They're definitely the ones to own.
Moving on to Fang. You know what Fang is, right? Facebook, Apple, Netflix, and
Oh yeah.
Google. Yeah, you always hear Craver.
Amazon, Joel, Amazon. Come on.
Well, I'm sorry. I'm looking at
Amazon.
Amazon. I said Apple. Excuse me. And I asked him if he knows it. All right.
Yeah, Joel don't know it.
All right, Dennis. Dennis, you can go. You can go trade
Keeping you
that.
honest there,
Go
Joel.
trade. Go trade.
Okay.
Amazon. Okay. Broke down two components of Fang, Facebook and Amazon. Bad days on Friday here. First, let's look at the Amazon chart here. Finally broke that major support at the 660 level. Once again, pull back to buy here. We got a little more downside. You got a big gap to work in down here at the 560 to $600 level. Thoughts on Amazon?
Amazon, you and I have been talking about Amazon for months, and I think every single time I've come on, they've been higher and higher than the last time we spoke, and every time I've said it's been too rich for my blood. They are, as I've said before, they're amazing. They're not only a retail player, but they're also a huge tech player. I think that you're either one that's willing to pay these nosebleed valuations or you're not. I personally am not. With that said, I think that some of the owners of this have started to liquidate it, and I think that there's probably a bit more downside. But don't ever discount Bezos and his ability to, do a bit of financial engineering and drive some earnings in Q4. I think they're going to have the best Christmas of anyone within the retail space. They're going to have the best holiday season of anyone within the retail space. I think Q4 is going to be gangbusters, and the majority of it will be funded by the vendors that sell on their sites through co-ops and things like that. So I can't bet against them. I think they're probably going to trade down a bit more because they have priced in a ton of the expectations for holidays. But then I think as soon as Bezos comes out in Q4, clearly articulating how many Kindles they sold and things like that, it's going to pop again, and there's no one that can stop them right now.
And Facebook, that had a little bit of a technical breakdown as well.
Yeah, Facebook Friday was tough for a majority of these big players, including them. Twitter's still weak, and obviously Alibaba. Facebook, longer term, I'm a big believer in them. I would view this as an opportunity to pull more. The money that we spend digitally in marketing, all of it, not all of it, but probably about 80% of it has shifted away from Google into Facebook. I think that's probably a similar scenario for a lot of other brands that are marketing online. They have 4 of the 6 largest social networks within the world. You just can't argue with that scale. I am a long-term believer in them, and I would view these as opportunities to pick them up.
Got a stock coming out of the chat here. Now, this is a retail stock that's going in a different direction. DEST, Destination Maternity Corp here, hit $9 on the nose. 902 settled at $9. Kind of a lightly traded issue here, but look at this. Let's see how many updates we got in here. 1, 2, 3, 4, 5, 6, 7 up days in a row for this one. Any thoughts on Destination Maternity Corp?
Wow, it has had quite a run. I think that there was a lot of negativity priced in. They weren't as bad with their Q3 loss as anticipated. I would expect this one to probably trade sideways once it hits about the 10 range. I'm probably on the sidelines on this, and I'd wait and see.
Ryan, let's jump into some of the other retail stores here. Let's go to Macy's here, and everybody keeps trying to pick bottoms in Macy's. It continues to go lower. Again, on Friday, got beat up, went all the way down to $36 and change. Now we're looking at it here at $36.77 this morning. Is it going to be a buying opportunity eventually here in Macy's? I mean, this stock in August was a $70 stock. It's been cut in half here in 3 months. Is it really that bad at Macy's?
I don't think it's that bad. With that said, like you pointed out, I don't think this is the bottom yet. I think it's still a wait and see. It might be. This is back to 2013 levels. They've got the problem with the tourist traffic, or so that's what they're blaming. They've got the problem with the dollar. They announced 350 management layoffs about a week ago. I think majority of the negativity is built in. I wouldn't pick it up yet. I wouldn't go chasing a knife on this one just yet. With that said, in all of our meetings with retailers, I definitely have heard very clearly that it was a slow start to Q4. It's starting to pick up a bit more. But keep in mind, we're already halfway through December. So all those fall goods that are sitting on department store floors will start to get moved early February. So there's not a lot of selling time left. And so what that leads me to believe is either we have a fantastic gangbusters end of December and January, and Macy's pulls the miracle off, or they take all that product that was supposed to be sold in Macy's and Kohl's and all these other stores, and they offload it to customers at deep discounts, or it gets moved through other channels like TJX, Ross, and others. So long story short, Macy's, I wouldn't catch this just yet, but there's definitely a lot of the negativity priced in, and there's probably a bottom in the near term.
General question, why is it that TJX, Ross stores, those stocks have held up so well? Why are the shoppers moving? Or is that what's happening here? They're not shopping at the big department stores, they're shopping at the discount TJX and Ross stores? Is that why those stocks have held up well relative to the rest of the market?
Yeah, that's definitely a big reason. I mean, if you look at department stores and the retail sales numbers that have come out every single month, they've been negative for 8 of the 12 months. There's definitely a shift as to where the customers are spending, and that's why you're seeing the Macy's of the world, the Lord and Taylor's of the world opening up outlets. They love shopping for the bargains. They love going on the treasure hunt. The other thing to think about is, like I said before, because it's such a slow fall, a lot of these Burlingtons and these Rosses and these TJXs are contacting vendors right now, scrambling to get remaining fall goods. And they're in a very leveraged position where they can say, look, you're halfway through fall, give us the stuff at half price, and we'll clear it for you. Otherwise, you're going to be stuck with a glut of inventory as a brand at the end of fall. So would you rather sell it for half off now or hold it for a full year? So I think, again, this is the bullwhip effect. You do poorly at the start of the season in department stores, you're just fueling the fire for the discounters, and they're going to have a lot more inventory at a lot lower prices that's going to continue to create that those amazing prices for customers and continue to move share to the discounters.
Any reason to go bottom picking in Men's Warehouse here? What a disaster. The merger with Joseph A. Banks. We had a couple guys in the chat here that were dipping their toe in the water when this issue traded. Let's see. It actually had its low of the move on Thursday at 13.56. Is there any chance for this stock to recover?
Stay away. I'd stay very far away. Digitally, they're not doing well. The websites aren't set up to function. They are overstored, meaning they need to close a few stores. One would argue that they also need to figure out how to revamp what their store looks like. It needs to come in a new format, and I just don't think that they have the CapEx to roll out a new store format to thousands of stores. I would definitely stay away.
Just real quickly before we let you go, overall shopping season, I mean, the big winner, Amazon, the big loser, some of the retail stores, and overall, you think it's going to be, any surprises to the upside here for the holiday season?
I think you just summarized it well. I think there's winners in warehouse, there's winners in retail, so the Amazons of the world. Other than that, it did not look good. 11 of the 12 months in 2015 missed the retail sales numbers. With that said, everyone's pessimistic on retail right now. There are a few names that do make some sense. Maybe take a few bets.
All right, Ryan Craver, retail expert and senior vice president of emerging brands at Digital at Lamour Group. Thanks a lot, Ryan. We'll talk to you again after the new year.
Thanks, guys. Have a great holiday.
Thanks, Ryan.